Hello beautiful people, welcome back to my channel. Hope you are doing well. In today's video I'm going to be revealing my trading 212 portfolio, and I'm going to show you guys all the stocks that I own, how much did I buy and why. So if you want to see which stocks did I invest in, please keep on watching. As I mentioned in my previous video, I do use Trading 212 and Vanguard as my investing platforms. If you haven't watched that yet, I will leave a link down below. Please go check that one out. But today we're going to be focusing on Trading 212. So what exactly is Trading 212? Trading 212 is a feeless trading and investment platform actually created in Bulgaria, which is where I am originally from. I was actually quite impressed and surprised when I found out that such a great platform was created in Bulgaria. I mean, Bulgaria is a pretty small country and you probably haven't even heard of it, but here it goes. Proud Bulgarian moment. Anyway, as a new and young investor, I was looking for a platform that was very user-friendly and very transparent when it came to fees. And this is when I came across a Trading 212. It did seem to be the simplest platforms of all. I understood it quite easily, and I literally had my account open in less than a minute and my funds distributed in less than 5. If you want some more information on the platform itself and all the features that it has, I will be doing a video reviewing it, so stay tuned for this one as well. Without further ado, let's get into my portfolio. Somewhere on this side you can see my portfolio, and as you can probably see, it is pretty small at the moment, but this is only because I have started investing on Trading 212 pretty recently. In fact, I think the first share purchase that I had was on the 30th of April, so just around a month at the time of filming of this video. So far, I have invested about £1,930, and I have seen a pretty decent return of about 6%. To be honest, I didn't really expect to have such a high return, especially given the current circumstances with the coronavirus pandemic, but I'm pretty satisfied with it for now. So let's have a look at what shares do I have. So the first stock that we have here is Amazon. Of course, everyone knows and uses Amazon. Amazon is a vast internet-based retailer who sells everything that you can think of, either directly or by being a middleman between other retailers and customers. But what you probably didn't know is that Amazon also offers web business services such as renting data storage or cloud computing. Let's see how much do I have of this share. I own 0.46 part of a Amazon share. As you can probably see, Amazon shares are quite expensive at the moment, and I wanted to start investing with a very small amount, but I also wanted to diversify this amount of money, and buying a fractional share of Amazon was a pretty good deal for me, and also a pretty good feature of Trading 212 that allows you to do that. I do hold Amazon for growth opportunities. As you can probably see, Amazon does not pay any dividends. If we have a look at the yearly chart, the growth over the past year has been about 35%, which I'm quite happy with, to be honest. And for the future, I don't see Amazon going nowhere. I think especially in this pandemic, the consumer base have been trained to be more e-commerce and online focused. And I think that will be the case even when this pandemic is over. I also think that a lot of other bigger retailers will realize that they can save a lot of overhead cost by reducing the amount of physical branches they have or strictly going e-commerce and online. And I think that will be the future from now on. Of course, there will be people that would love the physical experience of shopping, but I think that the future will be more e-commerce and online based. Also, their web and business services, I think there will be even more demand for that now, especially in this pandemic when companies are focusing for working from home and optimizing all of their softwares and systems and all that techie stuff that I don't understand. But I definitely think that that will be in demand, and this is why I believe that there are a lot more growth opportunities still for Amazon out there. Of course, the second stock that I have is Apple. I own 0.44 parts of an Apple share. As you can see, Apple shares are pretty expensive now as well. So again, buying a fractional share for me was a pretty good opportunity, and pretty good deal to have a Apple stock in my portfolio. Even though Apple's dividend yield is pretty low, I am again purely holding this stock for growth opportunities. If you have a look on the yearly chart, over the past 365 days, Apple stock has grown by 75%, and I am pretty happy with that. I am an Apple user myself. I like it. At least I can make some money off of them instead of only spending it on them. So let's see what happens. The third stock that we have here is Exxon Mobil, one of the world's largest energy providers and chemical manufacturers. I do own 7 shares of Exxon Mobil. The company has been around for a while with a dividend yield of 8%, which I am personally pretty happy about. I mean, I don't see people not using oil just yet. We do have electric cars and all of that, but I think we are far away from not using oil at all. I have seen quite big investors recommending this stock as well. Unfortunately, it has been hit pretty badly from the coronavirus, so I am pretty interested to see what is going to happen with the stock price when the world starts going back to normal. So let's see. The next stock that we have here is GlaxoSmithKline. GlaxoSmithKline is one of the biggest pharmaceutical companies. It is a product of 2 companies that merged back in 2001, but the GSK origins can be traced back to 1715. So imagine that is like 3 centuries. Wow. But GSK have been involved in a lot of controversies such as public health and animal testing. In 2012, the company was subject to a criminal investigation due to whistleblowers challenging the way the company was promoting antidepressants, and this turned out to be the biggest settlement between the United States Justice Department and a public company. I do own 6 shares of GlaxoSmithKline, as you can see. It is pretty much recession-proof stock. The dividend yield is 4.82%, which again is one of my favorite parts of that. It is a steady grower, as we can see on the yearly graph. For the past 365 days, the stock price has gone up with about 10%. I don't see this company going nowhere. I mean, if it survived 300 years, I'm pretty sure it will survive the Rona. However, I did expect the stock price to shoot a little bit higher, especially during this coronavirus pandemic. I did expect there to be a bigger demand and a higher rate of production. I'm not seeing that just yet, but let's see what's going to happen. The next stock that we have here is IBM, yet another tech company, which businesses include cognitive solutions, cloud platforms, and many more. The company dates since 1911, so this is almost a century, more than a century. Yeah. It's been around for a while. If it has survived that much, I'm pretty sure it will survive now. I do believe there is still growth for IBM, even though we don't hear the name as often. I do believe that obviously the world is more and more tech driven, so I'm pretty sure it will be around for another while. I do own only 1 share of that, just for a little bit of diversification. The dividend yield is 5.42%, which again is one of my favorite parts of that stock. And as I said, more and more companies will be looking to find solutions to their problems and to be using platforms such as IBM's. And I do believe that there is growth opportunities there and that IBM will be around for a while. The next stock that we have is Sainsburys. It's a UK retailer for homeware, groceries, and electricals. Now, this is a bit of a trial and error stock. I do own 30 shares in that. I did expect the price of the stock to go a little bit higher, since it was one of the only retailers that was allowed to be open in the UK during the pandemic. So I did expect a little bit of growth there. Unfortunately, that didn't happen. The dividend yield is pretty low, so I don't really gain much from that. But I am just going to hold on to it for a little bit longer and see what's going to happen. The next stock that we have here is Johnson & Johnson, found in 1886. that produces medical devices, pharmaceutical, and consumer packaged goods. Again, a pretty safe stock, to be fair. It has been around for a while, it will be around for a long while. I do hold this stock for growth opportunities. I think the dividend yield will be growing, which is currently at 2.68%, I believe, at the time of filming. And I do believe that over the years the stock price will grow as well. It is considered to be a pretty safe stock. I have heard a lot of other investors diversifying with that stock as well. Pharmaceutical and medical, I mean, we know that it's one of the industries that get affected the least, so I'm just holding it as a safety net stock. Marks and Spencers we have here, same as Sainsburys. It's a UK based retailer. Now, what attracted me to this stock was the dividend yield of 11% at the time, but unfortunately they have cut the dividend down to about 4%, 4.5%, I believe, which was quite disappointing, to be honest, but again, it was quite expected. I don't know what exactly is going to happen with the stock. Same as Sainsbury, I expected the share price to go a little bit higher because of higher demand, but that didn't also happen. So again, I'm just going to hold on to it a little bit, see what happens, and we'll decide what I'm going to be doing with both of them later. The next one we have is Microsoft. Pretty self-explanatory. I am purely holding this stock for growth opportunities. The dividend yield is pretty low, which I'm not gaining much from it. But if you have a look for the yearly growth for the past 365 days, the growth rate has been about 47%, which I'm super happy with. I mean, we don't know what is the future for Microsoft at the moment. Bill Gates have retired, we all know that. I do believe that if he's retired and Microsoft has been that successful up until now, I'm pretty sure it will be in good hands. Again, it's a tech company. I do certainly believe that world is going to be more and more tech driven, and I don't believe it's going nowhere. So I am going to be holding on to this one for growth opportunities and maybe even buying a little bit more. Next up we have Royal Dutch Shell, which is British and Dutch oil company found in 1907. So that's again about a century or even more than a century. The company has been existing. I am holding this stock because of the dividend yield, which is almost at 10%, as you can see at the time of filming this video. I am pretty happy with that. However, the share price has been going down, so I'm a bit confused as to what's going on here. Obviously, the coronavirus pandemic didn't help. All of the oil companies were hit pretty badly. But I'm going to hold on to it for a little bit more, see how it will perform when economies start going back to normal. So yeah, I'm gonna be keeping an eye on this one. The last stock on my portfolio is Royal Mail. It is a postal and delivery services company here in the UK. The whole country uses it. It is dating since 1950s. Again, it has been around for a while. Pretty safe stock. I think a lot of people had made quite a bit of money when Royal Mail actually went public and the shares grew like I don't know how many more times. So yeah, it has a pretty good dividend rate of about 5%. I'm quite happy with that. I think it will be growing pretty slowly and steadily, so I'm going to be holding on to that as a little bit of a safety net, see how it performs, and I will decide whether I would want to purchase more or sell it. As you can see, this is my portfolio, guys. It's pretty small at the moment. I'm not exactly sure what my strategy is. I am pretty passionate about dividend investing, so therefore majority of my portfolio was dividend paying stocks, but there are also some growth stocks in there as well for a little bit of color. I am looking into what I will buy next. I will keep that a secret until the next video. But if you have any ideas or you want to see me buy a particular stock and track it with me, please comment down below, give me any ideas. In the meantime, if you want to get a free share with Trading 212 when you sign up, I will leave a link down below where you can go and get it. Thank you so much for watching, guys. Thank you for joining me on my journey. If you're interested to see how my portfolio grows and what I'm going to be doing next, please stay tuned for the next ones. And remember, keep calm and invest.